join our family of creators. Your support means the world to us. Subscribe now to the Content Creator channel. Your support keeps us motivated and helps us bring you fresh, exciting content every week. Hit that subscribe button and be part of our journey. I don't think people understand just how playful this trade war can get. Hello everyone, and welcome to what I can only describe as a root canal without anesthetic. As we delve into the US-China trade war, we're talking tariffs, sanctions, and enough economic jargon to make your head spin faster than a fidget spinner in a washing machine. From the price of your morning coffee to the availability of that one specific fidget spinner you've been eyeing, this thing has implications. So, buckle up, buttercups, because over the next few minutes we're going to break down the key events of this economic showdown and try to figure out just what the hell is going on. And trust me, by the end of this you'll be the most informed person at your next water cooler chat. Why are there not more people talking about the de minimis issue? The US decided to play tariff whack-a-mole with Chinese goods, specifically those valued under $800. Because apparently, nothing says we're serious about trade negotiations like slapping a 120% tax on those adorable cat pajamas you ordered from Temu. Now you might think this is just about protecting American businesses. And sure, that's part of the narrative, but it's also about putting the squeeze on Chinese e-commerce giants who have, let's be honest, been absolutely cleaning up in the US market. Think of it as a way to level the playing field, or at least tilt it slightly away from the world's factory floor. But here's the thing about whack-a-mole. You hit one mole, another one pops up. This tariff, it's not just hurting Chinese companies. American consumers are feeling the pinch too, with higher prices on everything from phone cases to, well, cat pajamas. And what about those Chinese e-commerce platforms? Are they just rolling over and taking it? Of course not. They're savvy, they're adaptable, and they're already finding ways to circumvent these tariffs. You need to watch this if you struggle with understanding the US-China trade dynamics. So, while the US is busy playing tariff tag, China's over here like, hold my Tsingtao beer, I'm about to make some changes. They've set themselves a spicy little GDP growth target of 5% for 2025 and they're not messing around. But here's the twist. Instead of relying on exports like they used to, China's turning inwards, focusing on boosting domestic demand. They're basically Marie Kondoing their economy, decluttering their dependence on foreign trade and embracing the joy of self-sufficiency. Think of it like this. China's been the factory to the world for so long, they've kind of neglected their own backyard. Now they're realizing that a strong domestic market is like a good pair of comfortable shoes, essential for long-term stability. So how are they doing this? Well, for starters, they're pumping money into their own economy like it's going out of style. Infrastructure projects, tax cuts, you name it, they're spending on it. And they're also investing heavily in technology and innovation. Because let's face it, being the world's leader in cheap manufacturing is so last decade. Am I the only one that didn't know about the China+1 strategy? Remember that game of musical chairs we used to play as kids? Well, the global supply chain is having its own version right now, and it's called China+1. See, for years, companies around the world have relied heavily on China for, well, pretty much everything. But with this trade war throwing a wrench in the works, they're starting to diversify their risks. Enter the China+1 strategy, keeping some production in China, while also setting up shop in other countries, just in case things go south. It's like having a backup plan, but for your entire manufacturing operation. And who's benefiting from this shift? Well, a few countries are stepping up to the plate, offering themselves as attractive alternatives. Vietnam's become the new darling of electronics and textiles, while Mexico's seeing a surge in manufacturing for the US market. This is gonna blow your mind. Now, for the million-dollar question, will this trade war escalate even further? And the answer, my friends, is about as clear as a mud wrestling competition in a dust storm. Look, both sides are playing a dangerous game of chicken, each hoping the other will blink first. The US, with its tariffs and sanctions, is like that friend who tries to win an argument by shouting louder than everyone else. China, on the other hand, is playing the long game, using its economic might and strategic partnerships to chip away at America's influence. It's a delicate dance, this back and forth, with each move carrying the risk of unintended consequences. One minute they're slapping tariffs on soybeans, the next they're easing restrictions on tech investments. The problem is, this isn't just a playground spat between two superpowers. The global economy is caught in the crossfire, and it's feeling the strain. I don't think people understand the full scope of decoupling. No, not the kind involving awkward breakups and shared custody of pets. We're talking about the US trying to untangle its economy from China's, like a couple trying to divide their belongings after a particularly messy split. The US has woken up to the realization that relying so heavily on China for manufacturing has left it vulnerable, like building a house on a foundation of jelly. So, they're looking for new roommates, so to speak, cozying up to countries like India, Japan, and Mexico. It's all about diversifying their supply chains, reducing their dependence on Chinese goods, and maybe even trying to bring back some manufacturing jobs to American soil. Think of it as a strategic realignment, a way to regain some of that economic mojo they feel they've lost. Of course, China's not exactly thrilled about this. They've invested heavily in building their manufacturing prowess, and they're not about to let go of that easily. What's something people don't know about GDP? While the US is busy rearranging its economic furniture, China's decided to focus on its own home improvement project. They're doubling down on domestic consumption, like a single person finally embracing the joys of a well-stocked pantry and a comfy couch. See, China's realized that relying too much on exports is like building a house on a fault line. One tremor and the whole thing could come crashing down. So they're strengthening their domestic market, encouraging their own citizens to spend. They're cutting taxes, boosting social programs, and investing in infrastructure projects like there's no tomorrow. This shift from export-oriented growth to a more consumption-driven model is a big deal, folks. It's about long-term economic sustainability, about creating a more balanced and resilient economy that's less dependent on the whims of other nations. You need to hear this if you're a global citizen. So there you have it, folks, the US-China trade war, a tangled web of tariffs, sanctions, and economic maneuvering that's enough to make your head spin faster than a washing machine on high spin. The reality is this trade war is a symptom of a much larger shift in the global economic order. The US and China, these two titans of industry and commerce, are locked in a battle for dominance, and the outcome of this fight will shape the world for decades to come. The world is changing at a dizzying pace, and those who can adapt, evolve, and embrace the unknown will be the ones who thrive in this new economic reality.